Welcome back to another episode of Profitless on Purpose, a nonprofit accounting podcast from an accountant's perspective. Not just one accountant, but with me as always is Mark Palardy.
Hey, everyone.
I'm AJ Wheeler, your other host. This week we have a really good episode. We have our 3 articles for the week. Our first one is our final follow-up on the Everybody database sucks, and this is part 4. So we'll actually talk about the platform this time and who should be involved with understanding of who the database serves. We'll talk all about that. And then how much does it cost to start a nonprofit? It's the beginning of 2022 when we're filming this. Maybe your New Year's resolution is to start a nonprofit. Do you not know where to start? Do you not know how much it's going to cost? We'll talk about it, and we'll talk about the steps you need to take to start a nonprofit. And then we have an article on 9 tips to get more views, a nonprofit's guide to YouTube. So this is an article that kind of lays out what you need to do to put videos on YouTube, how to get them found, and why it's important for your nonprofit. We'll talk about that. And then our question of the week is, they have a no-call, no-show employee. Is this considered a resignation? We'll talk about the employment law behind it and kind of our take on how you should handle an employee that doesn't show up after a few days with no explanation or no call. And anyway, Mark, you have our first article for us. Take it away.
Yeah, you bet. This one is a continuing article. If you've been following us the past few weeks, this is part 4 of a series that we've enjoyed called Everybody's Database Sucks, part 4. And this is the 4th of 4. So this is all you get on the database question, and maybe it's enough. We'll have to check in with that. In the first 3 articles, the author talked about different aspects of why your database might be giving you issues. The one piece that he left for the 4th part is that there's something wrong with the platform itself. And I think the point that he makes straight out the bat is a lot of people approach database issues as, well, this is something that's broken in my software. The software is not working well, so it's the software's problem. So in the previous 3 articles, he kind of went into other solutions to have before you kind of come to the determination that it's the platform that's the issue. In this article, he lays out, well, actually, what if the platform is the issue? Why is the platform a pain point? And what do we do to solve this pain point? So, there's some common issues relating to platforms that organizations, nonprofits should consider. Who does the database serve? So in his estimation, these databases should serve the development department. And he could be talking strictly about a development database, but he wants to talk about, do all the functions and features of the platform itself serve who they're supposed to serve? He also posits that you shouldn't let other departments such as marketing, communication, programs, or especially those nasty accountants get their fingers in your database. But regardless, we'll just keep going on with his premise. So looking at your processes, which I think is a really important aspect of this, what is your company using these databases for? What are they specifically trying to get out? And try to break down what processes you need information from. So if we're looking at this as a database for development, do you have campaign tracking? Do you have donor segmentation? Do you have donor tracking? All those different aspects that a database may or may not have. And sometimes your database will have the bells and whistles. The software platform you're using will have all the bells and whistles, plus many, 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 many more to make the platform confusing and difficult to use for some users. And sometimes it's so bare bones that it doesn't have everything you're looking for. So you're trying to get to that sweet spot where you can grow into your platform where it has enough of what you need, but it's not so complex and frankly so expensive that it's overkill and people are intimidated to use it. So sometimes you want to come in with a legacy platform and see if it's all right for now. See if it's something that you can work with as you're growing and as you're determining what your new needs are. He posits that you definitely should not pick a system purely on cost. And frankly, we've all seen nonprofit budgets and we've all seen the bidding process where you you bid out to 3 vendors and then you pick the cheapest one and you go for it. And this often doesn't work in software world. So even having a super special deal or listening to that salesman come in and give you the pitch and say, this is going to work perfectly and everything is great. And, we all have seen how that works out. So just have awareness of that. And I guess the takeaway from this portion of the article is moving to a new platform is truly a risky proposition, right? It's always the grass is always greener, and you don't know the devil versus the devil you don't. So just have full awareness, kind of keep stock of what your platform is doing for you, what you'd like it doing for you. And I would even posit to get some input from other departments to see when you're moving to a new platform, if that's worth the risk and it's worth the time it's going to take. AJ, what are some of your thoughts on this?
Well, there's actually a lot to break down here. I think overall, I really enjoyed the article. And I think, you could almost like remove database and put in like accounting system or payment platform or any of these other systems that a nonprofit would need to use and kind of tailor this 4-part series to that. I think the author did a really good job of kind of really diving deep into like the needs. And I like that he left the problem with the system itself or the program or the software itself till the end, because I think a lot of people jump the shark and automatically think that if they have a problem with their system, that it's the system itself and maybe not the way it's set up or correct use of it. The one part of the article that I will say that I wholeheartedly disagree with is the fact that like the donor software is specifically for the development department, although I would say that that's who's using it day in and day out and has the greatest need for it. All of the other marketing, communication programs, and especially accountants need that information in some way. And so, involving those key stakeholders in your decision and in the process of trying to determine what a database can do and what it can't do, I would say it's good not to let the other departments overwhelm that, but realize that they're going to need that information in some way, shape, or form at some point from the development department, especially if you're subject to audit. The development department is looked as like having different, needs and tracking of money different from the accounting department, but you need to be able to reconcile those two things together. If the development department is somehow recording that, they got $1 million in donations, but only $400,000 worth of donations is showing up in the accounting system, why? What is the timing difference? What are they calling wins upstairs as opposed to, the accountants in the basement seeing cash come in the front door? So, I think involving those departments, at least to know what kind of information they would need from the database, is crucial, because you don't want to get into a situation where you implement this brand new system and you can't provide other stakeholders, which happens to be those other departments, the information that's needed. I might also say that he lists, like in the system fit for your processes, one of them is grant management. And I would almost argue, and I've seen this play out in organizations where the development department hoards or silos grant applications and grant, like notices of awards and grant agreements. And that hamstrings the accounting department to be able to perform the revenue recognition portion of those contracts. So if you're essentially also to grant reporting, if you're essentially leaving that to just your development department, it's a recipe for disaster when it comes audit time, or you're unaware of grant funds, of how they're to be recorded, especially if it's a multi-year grant with payment up front. That needs to be a two-way street for the development department and the accounting department. So just leaving the grant management and campaign tracking and donor segmentation to the development department is like a recipe for disaster, to be honest. Like, you really need to be able to reconcile the donations and the donor segmentations that are set out in the development software to the accounting system. And even more so, that grant management function needs to be, it needs to be a two-way street between development and accounting. So, I mean, of course, we're biased as accountants, thinking that that this should be a two-way street. But I really wholeheartedly believe that everybody, it's a much more successful organization when all of those departments are working in conjunction with each other and able to share data back and forth that's understandable between departments, as opposed to having a siloed or walled off garden that, accounting's not privy to or able to, reconcile to their records. So my one, kind of cautionary tale on this.
Yeah. And I want to just kind of riff off of a little bit of what you said, the term siloed, because this is I think the problem here. And I think this is sort of what he engenders with the suggestion, well, don't let those other departments in and push themselves and assert themselves to ruin your database by making their needs known. And I have seen this in organizations where siloing happens, and each department is kind of in competition for the resources, and they don't work in conjunction with each other. And then when things fall apart, you end up spending way more time and money throwing money at a problem when you're trying to bridge the gap, when it's like, oh, if I had just talked to you in the first place, we could have avoided this problem from the get-go. So, I think AJ's point that this is not something you want to do in isolation and keep other departments out of, is a really poignant one, not just for database solutions, but for anything that's going to affect the organization wide. Because once you start, obviously, if you're in an accounting department, you don't want buy-in from everybody on every little decision. But for something that's going to affect other departments and affect them for the long term, especially with larger scale investments like a database, you definitely want buy-in, and you definitely want people to say what their needs are. Sure, you could have somebody like a development department that says, well, these are the primary uses of it. But then if they purchase a piece of software that can't do the accounting or can't interface with marketing, or you can't pull data out of, for anything except development, then you're having to create systems, Excel sheets, manual processes to get these things done. And it could have just saved you money in the long run by spending a little more on a program that covers most everyone's needs. So yeah, I think some great points, but again, I'll reiterate, I think this was a great series, and we'll link the article down below. And please feel free.
I might also add, I really enjoyed the part about not trusting the salesman, because I've seen this play out more than once in an accounting system kind of thing, or in like an add-on or something like that, where the salesman, and he says it, they're not your friends, and they generally don't have your best interests in mind. And that couldn't be farther from the truth, because that couldn't be closer to the truth, because I've seen it where, they yes you to death and they tell you it's going to do everything you want it to do. And once you get it implemented, it doesn't do what you need it to do. I've had this on expense reimbursement platforms happen. I've had it on accounting systems happen, even audit software. Back when I was in my public accounting days, it's a road fraught with many bumps.
Right. And then you sign up with the program, and then you start implementing it on the back end. And the people who are doing the implementation were like, who told you it could do that?
Yes.
Just like, no, I'm already too far down the road.
Yes. Oh, the worst are the retirement plan, benefit plan people from especially like a payroll provider, where they're just like, accept everybody in the plan. And all of a sudden, like your one part-time employee that works 2 hours a week, is subject to, an employer match or something like that. Or you have so many people you need a benefit plan audit, or oh my gosh,
payroll platforms are notorious for this. It's like, over promise, under deliver.
Well, I should probably stop there before we make this a 2-hour episode about
AJ. I think you got our next article.
Definitely. So this next article is actually, we're recording this right after the first of the year 2022, and so we thought we'd present an article that kind of talks about starting a nonprofit. Maybe new listeners are thinking about, it's their New Year's resolution to start a new nonprofit. So I pulled an article here. It was just put up by Nonprofit Hub, and it's titled "How Much Does It Cost to Start a Nonprofit?" So they kind of talk about what I'm glad they didn't do is assign a number to this, or a dollar amount to how much it takes to start a nonprofit. And we can talk about why I think that's great, because I think, assigning a number is iffy at best, because there's so many different types of nonprofits out there. But I'll walk through kind of the bullet points of what the author kind of says. It says, plan like a business, create a business plan, which I think is very viable. Often, I think the general public think of a nonprofit and I want to start a nonprofit. And I think that's great. Where are you going to get the money to, support this nonprofit? Oh, and they don't think about the money coming in or money going out, or what this project is. They have very lofty goals of some kind of social good that they want done, and they think that money's just going to fall out of the sky. So creating a business plan on how you're going to pay for the nonprofit, what it's going to cost, what operating costs are going to be, how scalable it is, all of that, and budgeting, budget. We've talked about it many times on this show, but creating a budget around this is vital. So cost categories to plan for when you're starting a nonprofit. So you're talking about the original or the origin of a nonprofit. So you're talking about registration and filing expense. You need to register, of course, with not just the IRS, but usually you need to incorporate an estate. And so, there's costs associated with that, and filing fees. And then you're also talking about presence. So they're talking about marketing and how you can be found and how your services can be found. So they're talking about, what those startup costs may be, and be aware that there's programs out there to help with this. Google has, we've talked before about Google Grants and Google AdSense and all that kind of stuff from being available to a nonprofit, and things like, payment platforms. How are you going to accept donations? That kind of thing. You need to look into this because they're vital. And the other part that I'm glad the author mentions is hiring an attorney and or a CPA to get you through this first part. A lot of these forms that you'll be filling out and filing expenses and registration are, they're government forms, and they're not fun to read. They're not fun to fill out. And if you get them wrong, you basically have a shot and you got to redo the whole thing. So, a little money up front to pay for these things shows you're serious and kind of get you through those difficult questionnaires that you have to fill out and the forms. They talk about initial marketing expense and service and program expenses. So, and I think this is where we can spend a great deal of time talking about, because this is really where the rubber hits the road. What is it going to cost to deliver your services and programs is vital. And I think a lot of people skip over that. They think of starting a nonprofit as that lead up to getting started. And then kind of you're left holding, what do we do now kind of thing. And so I think they kind of map out your program's impact and examine if you can deliver on it incrementally. The slow and steady approach is usually good, as opposed to just trying to cram in as many participants and hit the ground running as quickly as possible. Growth is money out the door, and we can talk about that further. But realistically, these are the things that the author lays out. So I'd like to get your take on it, Mark. Do you think maybe the author missed something here, or I'm sure there's more to talk about as far as like planning goes for expenses?
Yeah, I actually have some experience with this, and having gone through the trenches of this, it's interesting because there's an aspect of starting a nonprofit, right, where you think, well, I'm going to just start a nonprofit and I'm going to, get all this money in the door, and people are going to get all these, deductions, these charitable tax deductions. But that takes a while, right? You've got your 501c3 paperwork or whatever type of nonprofit paperwork you're going for. And so you have to kind of plan ahead to realize that you're not going to immediately have a 501c3 letter. So as you're soliciting for your initial donations, you might not have a guarantee that these are going to be tax deductible for people, right? When you apply, this is something I learned as I was doing it. When you apply to be a nonprofit, whatever the date of your application is, once you're approved, it goes retroactive to that. So it's almost like you're asking people to donate money contingent on you getting the 501c3. They're still donating the money regardless, but whether it's a tax tax deductible contribution is kind of up in the air. So there has to be some level of planning for that, right? You have to know, probably starting small and then scaling up, but it's going to take some time, 6-8 months, sometimes longer, to get the determination from the IRS. And like AJ was saying, if it's not right, if there are errors, then you got to go back and fix whatever those fixes are. They let you fix stuff, but in case you hadn't heard, the IRS isn't super quick with anything. So once you get it in front of them, you want it right on the first go. And so, there are ways to not get around, but to kind of work into the system. I think the points that this article makes are great. But I think one of the aspects you should probably think about when starting a nonprofit is start small, right? You're not going to start with employees. You're not, you're creating a mission and vision of what you want to do. And it could be a grand vision, but unless you have some back pocket organization that's willing to fund you, or a government grant is coming, which likely isn't going to happen until you have your 501c3, you can't really just upscale, start hiring employees. You got to make the budget, you got to make the plan, but you got to also take baby steps, because this is not going to be an immediate, like, my vision is realized. I mean, I guess that goes for all new businesses that you're starting. One interesting thing that I've seen a few times, and it works well, is if you're starting a nonprofit and you have a vision, but you're also connected with some other nonprofits in the area, or people who have similar organizations that are complementary, not necessarily your organization, but would want to work with you, they can actually take you under their wing as a program while you're trying to get your 501c3 going. That way you can be soliciting donations under their tax ID number. Obviously, they have to believe in you, know you, sign paperwork to this effect. But this is a way that you can immediately solicit donations and make sure they're tax deductible. I mean, I know nonprofits are not all about tax deductibility, but certainly it's a big draw for people to donate money.
Yeah, I think that's a great point. Fiscal sponsorship is like what we call it in the biz. But yeah, I think approaching like a program adjacent or a nonprofit that's kind of adjacent or similar to what you do, and seeing if they would be a fiscal sponsor for your upstart nonprofit is a great way to get started. One, it alleviates you having to do the accounting from day one. Usually they have like an administrative fee that they would charge you as a fiscal sponsor to like process your payments and pay people out of your fiscal sponsorship. It also helps if you can partner with them. Mark talked about not being able to get grants until your 501c3 status or 501c whatever it is status is approved. If you're a fiscal sponsor under another nonprofit organization, you can start going after those grants as a program or as a sub kind of fiscal sponsoree from that nonprofit. And it gives you some runway room there to get your paperwork in, to get your feet underneath you, to get funding, and to show the results of your fruits of your labor in that area. And so I think it's a good thing to think about. And I would say one thing that the article didn't talk about is accounting, of course, like who's going to do the accounting? How is that going to happen? Is it on a spreadsheet? I mean, if you're small enough, you can do it on a spreadsheet. Although, again, we've talked about on this before, there's many grants really is what it is for super discounted accounting systems, one of them being QuickBooks Online. That's done through TechSoup. Once you have your 501c3 designation, you can apply to get that accounting software for a quarter of what for-profit businesses pay for it. But I think all of that is really easy to overlook when you have kind of this grand vision of starting it. So, take your time, make sure you check off all those boxes, and really, take it as it needs to be run like a business. Although you're providing social good, you need to think about dollars in, dollars out, and what it's going to cost to start and how you're going to get up those startup funds, because I think that's where a lot of beginning nonprofits stumble. And so, I think that's a great point out, Mark, is to partner with a nonprofit that's maybe adjacent or in your area of of where you want to serve the public, and see if you can't get a fiscal sponsorship or come under them as a separate program. Mark, I think you got our next article for us here.
You bet. This last article today is called 9 Tips to Get More Views, a Nonprofit's Guide to YouTube. All right. So why am I talking about YouTube today? Well, one of the interesting things that this article points out is that YouTube is huge. It is more hits yearly than Instagram and just slightly under Facebook, with 2 billion monthly active users. So that's a lot of bandwidth, a lot of area for which your nonprofit, if it is producing video content, can get itself out there in front of other people. So I think this is a good time of year as we're talking about marketing and new marketing strategies. If your nonprofit is not currently doing anything on YouTube, might be a good idea to explore that. So here are some of the tips. Make sure that you title the videos for people that don't know your brand, right? So if your nonprofit is named something obscure, you want to make sure that the title of your video gets to the heart of what your nonprofit is doing. Because if people don't know you yet, they're not going to know to look you up by name. So make sure it's approaching what your mission is. Add thumbnails and end screens to every video. And anybody out there who's watched a YouTube video, you have those linkages. You can point up to a corner of the screen and have people click to another video, and add content so that you're keeping people engaged and giving content that adds to the process. When it comes to your descriptions, more is more, right? Because SEO, search engine optimization, looks for keywords. And even though you might think, I don't need a description in the subtext of my video, if you put more description in there, you're going to be more easily searched. You're going to be found by people using different search terms. And, you don't want it to be word salad so that you want it to actually be a description, because we've all seen those where it's just a list of 50 hashtags and you're like, oh my gosh, that can be a turnoff as well. But make your descriptions meaningful. Add tags to every video. I guess I spoiled that last one. So hashtag a few things to make sure that your content is more findable. Mine your own content to produce short form videos. So if you already have some video of an event you did, a fundraiser, something where there are some gold pieces in there, where there is some stuff you can cut out, obviously with participants' permission, but use those, cut those down a little bit, edit them, and put them up on YouTube. That's a great way to get your word out. And especially if it's at some program or something where you're actually serving the community, or, you're fulfilling your mission, it's great for people to see that. It gives them inspiration. And they also suggest using long form videos. If you've got something, even if it's a marketing piece or something that you've put out there that shows what you're doing, if it's longer, there are some people who use YouTube like they would use Netflix, and they're just looking for longer information. And your grantors might even be looking you up on YouTube to see what kind of content you're providing. People, foundations, people you're looking for, asking for money from, might be searching this out as well. Create some playlists within your YouTube channel so that people can find, if you've got multiple programs, for example, make sure you have a playlist in there for each program so that you can not only advertise that you're working on multiple aspects, but so that you can have each playlist filled with different content on what each program is doing. This comes over time. You might not have playlists on day one, but over time, this is going to be helpful for you. Engage with some trends, even if they seem a little weird. Yeah, I know that sounds like you're just kind of trying to glom on to something that might not fit your mission. And don't ever do that, right? Make it mission appropriate. Make it speak to the tone of your organization. You don't necessarily want to do, some weird cinnamon challenge or something just for the clicks. But, we all can remember from a couple of years back the ALS challenge with the ice bucket, and man, that caught fire, right? And then a lot of other people, a lot of other organizations decided that they were going to try this as well. And in that case, it tended to show solidarity, right? It wasn't, I'm just copying what they're doing. It's like, I believe in this mission as well. And by the way, have you heard of my organization? So, there's some good kind of adjacency that can happen there. And finally, don't forget about the YouTube community. So, there is a community tab on your YouTube channel. It's good to explore that and flesh it out. A lot of people don't do anything in the YouTube community, but it allows you to connect and link with other like-minded organizations or partners that use YouTube, right? If you have big donors that, that fulfill your mission or that grant you every year, it's not a bad idea to kind of get involved with them and link them in your YouTube community. So I thought there were some great tips in here, AJ. They might have missed some, or you might have some opinions on this. What do you think?
Well, I think what the article really highlighted for me, if you would have brought this up even like 10 years ago or even like 6 years ago, you probably would have thought, wow, this is really cutting edge. But I think it really speaks to how dynamic and social media driven a lot of marketing is these days. And I would say not to ignore that. I think, this is a pretty good, like, I guess, playbook overview of putting your stuff on YouTube, even if you're not a nonprofit. I mean, this, you probably would follow the same kind of game plan if you're a for-profit business. I would say one thing that I would like not really push back against, but like essentially, like, I guess the portion, like the getting the videos up there and having those short form ones, I think, repurposing your content and something that we use in our playbook for, this podcast and the other podcasts that TCA do is use, like leveraging one piece of content to create more pieces of content, and having those smaller videos, statements of thought that come from this is really important. And I think it makes it more efficient for when you're making content or marketing tool, using this as a marketing tool. So I think it's all great, like, tips. I would say that, like, I think, and Mark said this, really making sure that it's hitting home on, it's not just a video to go viral or something like that. It really is honing in on your mission. And what it does is this may not drive like donations. It may not drive like, but it will drive eyes and, I guess, awareness. And if somebody ever looks up your organization, it shows that you're giving back, and it really gives you a platform for some long form impact that you have in the community and what your organization is doing. And it provides you, and you're your own editor and master on this of what you're putting out there. So I would say you really take the time to include this in your marketing strategy and make sure that people are able to access you where they access social media from, whether that be Facebook, Instagram, YouTube, whatever it may be. Make sure that they can see you and that you're standing out. I know a lot of old school marketers would kind of think, you get namesake by doing, and the program really driven. We live in a different world than we did even 10 years ago. And I think this is vital for nonprofits to stay relevant and to reach the people that maybe haven't heard about your organization. And it creates, you're talking about a World Wide Web, so it creates opportunity outside of your local community, maybe, that you're serving. So, and if what you're doing resonates with other people, you'll have more of a namesake. And I think for nonprofits, having that namesake or having that recognizability of what you do and who you serve is vital. And I think these are good tips.
Yeah, it's all about the engagement, people. It's all about the engagement. AJ, I think you have our question du jour. Take it away.
Our question of the week. Well, and if you have questions, make sure you leave them down in the YouTube comments. If you're listening on YouTube, you can always tweet at us at Profitless Pod on Twitter. If you have any questions you'd like us to answer on the show. This one actually has, I'll read the question here. My employee has a no call, no show for 3 days, and they want to know if this is a resignation. So to give a little bit more detail here, they have an employee who has been very reliable over the 3 years that they've worked at this organization. And the individual has a very important role in that organization. And essentially, like they've missed work before, but always been in contact with them. And so for the last 3 days to a week, without warning or explanation, they just didn't show up for work. And so they're asking, and essentially they say that they have a policy that if somebody misses more than 3 days without any kind of explanation, that's considered a resignation. And they want to know if they should provide their final pay to this person. So I think that kind of sets the question out there. I'll let Mark answer first. I have some thoughts on this, but I'll ask Mark for his input on whether or not this qualifies as a resignation.
Yeah, I think one of the reasons we chose this question, it's very HR related and maybe not as much nonprofit related, but with the Great Resignation going on right now, or as they're dubbing it, you might have people who feel emboldened to just not show up to work as they're entertaining other offers, or they don't feel safe at work, or there may be numerous other questions. So this is an HR question, but it is also one that managers, accounting professionals, others need to be aware of and need to know how to respond. The specifics of this question as to whether this is a resignation is interesting. And I think, my take on it, and I did a little research on this, but my take on it is, the definition of a resignation is that somebody of their own volition quits. It's not, you can't force a resignation, right? You can lay off somebody, you can fire them, you can terminate them for cause or for not cause, but you cannot force a resignation. And it feels like what a lot of organizations try to do is they want somebody to quit so that they can not have to pay unemployment. This is common. I've seen this in a number of businesses where they just make the job so miserable for the employee that they want gone that employee quits. And then, when they file for unemployment, the organization will say, well, you quit, you don't get unemployment. And that's not necessarily how unemployment works. I've seen a number of cases where people quit and then they're still successful at getting unemployment for particular reasons. So I think the resignation piece of this should be off the table. But, my initial blush on this is communicate, right? Like if somebody hasn't contacted you for 3 days, communicate, try to figure out what's going on. And you probably, they clearly have a policy, and the policy says if you no-show for 3 days, it's an automatic resignation. I would say an attorney probably needs to look over that handbook to give them some advice that that's not exactly legal. But, if you've got a progressive policy of no showing, first time we'll forgive it, second time, you get a write-up, third time you're terminated, something like that, that makes it a little clearer. But I think communication here is key, right? Because there could be a number of reasons, right? This person could be in the hospital. This person could have had something that qualifies as FMLA, Family Medical Leave Act, a legitimate reason for them being out of the office. So, it seems like this question is putting the cart a little bit before the horse. So before deciding you want to just resign on behalf of that person, try to figure out what's going on. AJ, what are some of your thoughts?
No, you went exactly where I thought. I would imagine, like, especially if they're in such a vital role that the questionnaire kind of like sets forth, or the question that came in set forth. I would try to contact them, but nobody's irreplaceable. So don't think that just because they're a good employee, they get to bend the rules, or, just no show, no call and anything, and then show back up 2 weeks later and say, oh, hey, how's it going? So I think it's important to stick to your policies, but also too, like understanding why this person didn't show up, I think is vital. Even if you have to let the employee go, it goes a long way in understanding why they didn't show up. Is this is this something that we can fix on our end? And I'm, this is outside of like HR law and, employment law and all this stuff, but something to consider in your nonprofit if this happens is like, why did this happen? This employee seemed happy that, or he or she or they were doing a good job at what they were doing. They just decided to, walk off. I would contact them and try to get an exit interview with them to understand, what happened, and so in the future, maybe that employee is gone, or you have to terminate them because of policy, and you don't want to show favoritism or anything like that. But understanding how this doesn't happen again, and we're living in a time where many people are looking at what they're doing in their job and saying, boy, I'm not getting paid enough for this, or, they call it the great resignation right now, and so I think really trying to understand where an employee is coming from so that you can, especially in a nonprofit, right? You're trying to make, need-based work or community work and serving the public good attractive to other job applicants. And I think understanding where the shortcomings were that cause this person to leave and just not show up is vital, for the nonprofits going forward, for them going forward and understanding how they could fix something like this, and it may be the case that they just walked off and didn't want to work there anymore. But I think, being able to ascertain that and having somebody, do an exit interview to understand that is a really key part that I think sometimes HR departments miss.
Yeah, and I would also add, there you may have a toxic manager issue or something else going on in your organization that you don't even know about. And I think AJ's notion of the exit interview is crucial, because you want, if somebody's leaving anyway, you want to get to the heart of what is actually going on there, whether that be an HR department. Sometimes you don't want it to necessarily be their manager who's trying to find out this information as to why they're not showing up. Because if it is a toxic manager situation, they might not be willing to say that to the person's face. So, the trend is your friend. If you're seeing this happen over and over and over again, question what's going on. Don't just, stick by a policy because the policy exists. Sometimes policies need to be amended, for good reason. All right. And with that, I think that brings us to a close of another episode of Profitless on Purpose. We really appreciate you joining us today. On behalf of AJ and myself, please join us on Twitter at ProfitlessPod. Feel free to comment below, send us some questions. We always love your feedback. And, we'll see you next time on Profitless on Purpose.
Thanks, everybody.